Hey, what's going on? What's going on, everybody? It's your boy JonFx Masterminds. I just want to just go over the simple trade structure that we have each day, or when it's available, when the market is trending. Um, what I'll be talking about today is really just we want to make sure that we keep in the trade process simple. All right. We don't want to overcomplicate it because once you start overcomplicating Forex, it gets really confusing and you know, frustrating. Okay. So what we don't want to do is frustrate um the task, and we don't want to frustrate um the objective of what we have to do when we come to our chart each week or each day. All right. So um I'm making this video. Recently I ran across a guy who's been trading. He basically trades the trend structure. Um, and he trades it really well. Trades it pretty good. Um, and so I wanted to go over just keeping it simple. Just keeping it simple. Don't feel like you need a bunch of tools, the latest indicator to see this stuff. Um, you really have the tools, the basic tools that you need to see the trend structure on your, you actually have it just right there in your indicators list. Um, I have a few additives on my chart, but basically what you need is just simply the 50 moving average on your 1 hour chart. The 50 moving average in its exponential form, EMC, or you can use the 50 moving average in the simple form, the SMA. I'm sorry, I meant the exponential form is EMA, and the simple form, moving average, is SMA. All right. And basically what that looks like, um, I'm still old school. I still use the MT4. A lot of people say it's dated, but it works just fine. Um, so you got a simple moving average form that you can use. And you see how the curve of the moving average looks slightly different, just slightly different. Um, or you can use an exponential form, right? Exponential, all right, of a moving average, and you see how it's just slightly more crisp, all right, with the moves of the market. We use the moving average just to give us direction. Basically, when price is above the moving average, it indicates um, the trend, the current trend is flowing up. The price trend structure is flowing up. The order flow is up, right? Um, the market is accumulating buyers, or the market is luring buyers into the market, right? By showing a trend up. Also, when price is under a moving average, you see how price flowed down. It shows that price is flowing down. So um, during these times, we want to look for the simple market structure to to form when hunting an entry for an uptrend or a downtrend. Right here, currently in our face, we have an uptrend. And again, what we're talking about is just keeping it simple, what it is that we're doing. So when you come to your desk, what you're looking for is you're looking for a trend. Um, you're looking for a trend that just started, but is also started, you know. You're looking for the beginning of a trend. You don't want a trend where too many days have went by. Um, because as you can see, if we can look right here, basically when this trend just started, after it stopped the consolidation right here, and it just started shooting in a direction. You got a day one right here. This is the 1 hour chart. The 1 hour chart shows us um what I call the weekly cycle. And this is a cycle or a trend that lasts for about 3 to 5 days. All right. And so we can see right here on day one where it started going up, day two, day three, day four, and then about day five, you see it got tired and start ranging for a reversal. All right. So back to my point. If you want to, when you come into your desk, you want to find a trend that's just getting started. In order to know if a trend is started, it has to create what we call some type of low and then a high. And if the trend is up, it needs to create a higher low. It don't need to break this low right here. It needs to create a higher low, and then it needs to come to a higher high. Boom. Now, as you get used to it, you won't need a bunch of these. You won't need a bunch of these indications in trend direction to know, okay, I'm in a trend, right? This is what you'll be looking for. This like a structured pattern, a trend structured pattern, right? You'll be looking for it to have a low, a high, a higher low, and then a higher high. That'll let you know that the trend is flowing up. If you come to your desk and you see like it's curving down, right? What you're looking for is for it to have curved down from a high and then made a low and then pull back from that low and made a lower high and then a lower low, right? And you need just you have to get yourself to the point where you see just one of these, not two of these. If you see two of these, then you kind of letting time, you kind of lose an opportunity to jump in. All right. Because the entry is once price pull back towards that initial low, right? The entry is once price pull back towards that low the next day. It's going to pull back towards this low. Either it's going to go all the way and touch it, or it's going to go somewhere near it, and then it's going to start consolidating just to go ahead and create a lower low. So this right here in turns will be, uh, I'm sorry, that right there in turns will be a lower high, which is where you got to put your entry. You got to put your entry on that lower high. You got to put your entry on that lower high so you can catch the lower low that it's going to hit, that it's going to make. All right. Boom. Same thing with here. Once you get one of these, a low, a high, and then a higher low, and then a higher high, then you're looking for a price the next day to come down, pull back towards this or correct, or however ICC say it. You're looking for price to pull back towards this particular high right here, but not break it, right? And then for this point to become a higher low, right? And then you're gonna have to get in that bad boy, buy before it goes and create. You gotta buy before it goes and create a higher high. Boom. Because in a trend, that's what it does. In an uptrend, that's what the market structure, that's what the price structure does. It goes from a low to a high, then it start creating a higher low, right? A new low point that is not going past, and then it breaks this high right here and makes a higher high. Boom. That's your signal to look for the uptrend, especially once you see a huge moment in the market like this right here. And I'm gonna erase this stuff off the chart so you can see it. Right. When you see a huge moment like this, where price look like it's just been in a range. It haven't been trending. It's just like kind of going in a sideways motion. We're looking for price to break out of this range, or what they call market structure, right? You're looking for price to break out of that. And then what are you looking for price to do after it break out? If it break up, we're looking for price to break up and not go back into it, but we're looking for price to break up and come back right here, make a lower, a high, right? I mean, a higher low, right? That was the low right here. This was the high, for example. And then we don't want price to come back towards this low right here. We want price to just find a support above the structure, right? We call that a higher low. And then we would buy with expectations of it to go and break the high. And we'll make money on that move if you buy down here on this supposedly higher low. All right. For example, so that's what you're doing when you're looking for a structure like this. Okay. So back to the objective, the task. All right. Um, so like I was saying, in an uptrend, you want to see at least one of these. You want to get good at seeing at least one of these, and then the next one you want to be ready for, you know, because the understanding has to be okay, if the market is trending up, I know it's gonna start off on a low, make a high, and then it's gonna begin the process of the uptrend, a higher low. It's not gonna go, it shouldn't go back down to this low. If it go back down to that low, then you want to wait because you want the market to actually make higher lows, higher highs, higher lows, higher highs in the uptrend. You know, you want to wait to see that at least one good printed one out on the charts. If you don't see it, scratch the trade or just wait patiently. If it's coming, you will see it. Trust me, you will see it clear. And I may erase this stuff off the chart so we can point to what's actually on the chart. But I'm just talking about what knowing what your objective is first before you get into this thing. And also over here in a downtrend, in a downtrend, you definitely want to make sure the same. You want to at least see one of these first. You know, as you get good, you'll be able to you'll get used to taking it straight out of the high. Out of the first high, you'll get comfortable. You'll be comfortable taking it straight out the high. But if you're not comfortable yet, you're just in your beginnings. Take your time. Make sure you see one of these first, a high, a low, and then a lower high. Once you see a lower high, okay, now we're getting ready for our setup, right? You don't enter just yet until you get used to entering in those sniper positions way at the top, right? The beginning of the trend, right? You want the confirmation. What is the confirmation? The confirmation is when it breaks this low and give you a lower low. Now you know, but now you're expecting a lower high. If it gave me a lower low, now I'm expecting a lower high. I'm not expecting a higher high. I'm expecting a lower high in a downtrend if the market is trending down, right? Now, what are we going to do? When they give you a lower high, you have to sell that lower high. It's going to look like the market is about to go back up, but it's not if it's downtrending. If it's downtrending, if price is under the moving average and it's downtrending, it's going to, in fact, go in line with the trend, which is whatever direction it's in. If it's downtrend, it's going to go back down and create a lower low. You have to believe that. You have to begin to believe it. You have to look at the charts enough to see that this is what the charts, what price does in trends, right? Sometimes they stretch it out, and we just have a few examples of that. Sometimes they stretch it out. Sometimes they do it real tight and small, to try to trick you. But this is what is happening. Okay. So this is how simple you have to keep it because you have to get the point is you have to get confident and comfortable knowing that this is the only thing that's happening. Why? Because you have to put money on these trades. If you want to make money in this market, you're going to have to put money on these trades. If you're tired of seeing small change, you know, 50 cents, a dollar here, maybe $100 there, and you want to see thousands of dollars a day, $5,000 days, $10,000 days, you're going to have to get so confident and you're going to have to become so knowledgeable of the market structure and what it does during a trend when it's actually trending on a larger cycle, right? You're going to have to become so confident that you trust that what you understand is what's about to happen. And so you put the amount of money in the right spot in the cycle or in the trend in the structure, and you make money once it go and draws out to the next pivot point or to the next checkpoint, the higher high or the lower low, right? That's the point for this. That's your objective. You have to become confident, that and to understand that this is what's happening. Okay. You don't need is We don't need to hunt for the latest and greatest. There's no bot. There are bots, but we're not talking about bots. There's no bot. There's no tool that's going to help you more than you just sitting down at your charts and just realizing the simplicity of how the market actually moves when it's trending up or down. The beautiful thing is the market only trends two directions, up and down. It's not like it trend a whole bunch of different directions. You got to figure this out, figure that out. No, the only thing we do have the challenge in the market is waiting for the trend. That's the one challenge in the market because sometimes the market can go in some large ranges. It can seem like it's doing this type of stuff, this range type of trading for a very long time at times. And that's because you have larger structures in the market on the larger time frames that causes the small time frames to just start jumbling up or what we call jamming up, looking just rangy instead of trendy. We want the market charts to look trendy. Um, but when they do, once you get past that, if you remain patient enough, and once you get past the ranges and that bad boy start breaking out of the structure, then your objective, if it break up, then you're waiting for um, a low to a high and then a higher low. Once you get your higher low, boom, you got your process for entry. What's your process for entry on an uptrend? Once you get your higher low, you're waiting for a higher high, and then you're going to enter in on your higher low, the next higher low. But you gotta get to the place where you're not letting a lot of these pass you by. You don't need to see one. You don't need to see two or three higher lows before you believe that it's trending up, because the market structures and the trends do have an end point. They have a point where they come to an end, you know, um, and they will reverse in the other direction, taking all the money they gave on the other side. They're taking it all back on the new side. All right. So, which is what you see right here on the charts. And we explain that a little bit. Um, so that's what you want to do. If you also, back to the point, if you see price ranging for a long time and then finally it breaks out of that structure, it breaks out of that rangy structure, breaks down, okay, the objective is, okay, you got your high point, you got a low point. Now we waiting to see, we're expecting for a lower high. We don't want a higher high or a same high because that'll still be in the range. We want a lower high if it breaks down, once it finally breaks out the structure. And once you get your lower high, then you have your setup forming, the entry setup forming. What do you need for entry? You need a lower low and then a lower high. Once you get your lower high, then that's time to enter there before it go and create a lower low. You want to sell. Once you get your lower high, we sell lower highs and we buy higher lows. Okay. The original point for this video is to keep it simple. Keep it simple. But before you can keep it simple, before you can trade this stuff, and in order to keep it simple, you have to first understand what it is that you're coming here to do. right? We know we want to make money, but you need to know how to make the money. In order to make the money in the Forex market and any markets, you have to have an order placed in the correct direction that price is flowing in. If you place an order in a direction that price is flowing against, you're going to lose money. No, the markets are not against you. You have to learn how to become one with the market. And in order to become one with the market, there are things you have to learn. You have to learn the market structure. You have to learn how price moves in the market, the repetitive way it moves in the market. And then you have to bring yourself to trade it in real time. Okay. This is really all you need. You don't need to overcomplicate it, filling up your charts with a bunch of indicators and you can't see price structure. You have to be able to see price structure clear. This is $1 million information for free that I'm sharing with you. Okay. Now, let's take some examples from the chart. All right. So here is keeping it simple. Simple. Keeping it simple. Okay, we come to our charts. Just using the 50 moving average. I know you see these lines on my background. Don't mind those lines. Well, you can mind those lines. They are important. This is a very powerful pivot tool. But I want you to keep it simple. You can do this without the pivot tool if you just understand what it is that I just explained, what you're looking for. All right. So we come to our market and where we see price, we see highs and lows, highs, lows, highs, lows, highs, lows. What do we want to see? We want to see a low. We're coming to our chart to find a trend. So we need, in order to find a trend, you need a low point or a high point. In this example, we're going to start from a low and we need price to start moving or up, right? Create a high. And then when it do pull back, we don't want it to go back down to this low. We want it to make a higher low. Once it do that, then we have ourselves an entry. That's a very advanced entry, but or you can wait for a setup, which is when it makes a higher high, right? Right here, you just have a low and a high, right? You get a higher low, then a higher high. Now you have a setup. What is the setup? The pullback that comes from the higher high, which is called a higher low. Normally, that price pull back to the previous high. From the higher high, it pulls back towards the previous high. It don't pull back towards the higher low. So you can kind of set a line right there. And if it do break it just a little bit, you can expect it to start turning around and you'll see it fumbling or stuttering right here in those zones, in that area where it made the original first high, right? If you start seeing that, that's where you want to have expectations of the market going to create what? A higher high. And you can assume this is your higher low. What should come next after a higher low? You can assume that the market is going to make a higher high or come back to this same level as this high. But either way, this is your trade setup. So what you want to do before it takes off to do either or, either go back to the same level or create a higher high, you want to enter a buy order. You need to put a buy order in, right? You want to enter a buy order in there. Let's change it to the color. Actually, I'm going to do it like this. So let's make believe. Let's see if I can do this before the market gets there. All right, so boom. All right, you want to put a buy order I can't do this. Let me move this before it hits it. I don't want to. All right. So I'm sorry. I was trying to make an illusion order, but I have to create it like this. Sorry for being so technical, but I hope you understand the simplicity of your objectives so you don't feel like you're missing something you don't understand. All right, so before this price takes off to go make this higher high, you're going to have to put that order in right there. Yes, it's going to feel funny because you're going to see price moving down and you're going to be feeling some type of way because you're going to be watching your money move around. Bump that. Stick to the plan. The plan is it's uptrending. You came to the market. Remember your objectives. You came to the market and it was ranging. It broke out of that range. So that's your first low. It gave you a high, right? It broke out of this range. So you're expecting the pullback, the higher low. You already got a low and a high. So if it breaks up high, you're expecting an uptrend type of structure, right? Uptrend type of structure is a higher low next after a high. So you need a higher low. You don't need this low to go back down to the low. You need a higher low, right? Let's look at what EU gave us. They gave us a higher low here. All right, so it went back down to this structure that it broke out of. All right, but didn't go back into it and didn't go back past it further down. Right. So at this point, you're gonna have to enter a buy order. Boom. And wait for it, whether you enter the buy order here, here, either one of these spots. No matter where you enter that order at, you need to place that order in. As you can see, price is going to move around it if you just put it, if you're not sure where to put it, or if you put it in the spot where you think is about to take off now, it is what it is. You put it in, and yes, price will move around it. These are I'm on a 1 hour chart, so these are hourly candles. They take 1 hour to draw out. The next one is not going to draw out until one whole hour has went by. So if you put that order in at this first candle right here, when this one closed, you're looking at one candle, 1 hour candle right here. And from here, where it actually took off, if you put that entry in right here, look, let me take my crosshair and draw it. So if you put that candle in right here and then the price took off right here, you had to wait, it looks like 11 hours. You had to wait 11 hours because that's 11 candlesticks, and these are 1 hour candlesticks. So understand the timing of how long it may take before you actually get what you know is coming. All right. The larger the time frame you trade this on, the larger the wait, the longer the wait. Okay. But you have to be patient and you have to understand structure and understand that your move is coming. All right. So if you put that entry in right there, and that price start taking off right here in this zone is about 11 hours of waiting time. Okay. But once you do put that once you put that order in there on that higher low, as you can see, this was an uptrend. We're looking at it in hindsight. You have to be able to do this in real time. This was an uptrend, and price did, in fact, but take off for how much? How many pips? It took off for about 877 points straight up in one day. All right. Your task and objective is to catch these points. You're trying to catch these points. You want to catch these points. In order to be able to catch these points, you have to know which way price is going. In order to know which way price is going, you have to understand how the markets move. What we're showing you is how the markets move when it's in a trend. There's a way that it moves in consolidation, and you can learn how to trade consolidation. We want to trade trend. We're talking about trend structure trading. Okay. So you want to trade in line with the trend. So this is the move that you have to catch. The move from the higher low in an uptrend. Okay. Once that higher low Once that higher low is in position, you have to place that order, and then you're gonna have to wait. All right, but if you do wait, look at the probability, depending on the pair that you trade. Look at the points that you potentially will be able to grab out of the market. All right, and if you look in the middle of if you look in the middle, you see the 10, the number 10, and you see the number 850. And then also you see the price in the crosshair, 845 is changing up because I'm moving. But you take that number and apply it by whatever dollar amount you trade in the market, and that's how much you stand to pull out the markets. All right. That's how this business works. That's the way it's always worked. It hasn't changed in the last 7 years that I've been trading it. Um, and it hasn't changed in the last 10, 15 years that I've been studying this stuff. All right. So if you want to swing trade, and if you believe that it's going higher, you can keep this order in from the bottom, because if it's trending higher, guess what? It's not going to break this low. It's going to make a higher high at your HH, and then it should make after a higher high, it only should make a higher low, right? And if you keep in this order in, you know, you can hold it. What you can do is you could take a stop. Um, so you could take your stop and put it in front of your entry to protect your profits, just in case they shoot down real quick and continue up, or do a little long move like this and try to knock you out, try to scare you out the move. You know, you can put a stop loss somewhere near here to protect your entry so you don't lose any money once you're up in profits. Um, but if you want to swing, like I said, if you want to hold and try to grab the whole thing, you know, after a higher high, you're only expecting a higher low. This higher low should come near the previous higher high. You see that? See how the structure works? I hope you're seeing this. If you're not, you can watch this video 1,000 times because it's yours. All right. It comes near that higher high. And then what should happen in an uptrend, if this is a valid uptrend, all it's going to do, baby, is make a higher high from this higher low, right? It's going to make a higher high. If it's going to keep repeating this structure right here, that's what you have to look forward to day after day until it stops creating a higher high in an uptrend, right? This is what you're expecting, just for it to keep repeating this structure, right? If it do make a higher high, you see that it make a higher high, and you have the guts to continue to hold on to this order. And even if you added another order in here, all right, and you will do things like that as you become more comfortable and skilled with just trend structure trading, you'll add orders or whatever, right? You can add it because you can add orders, because in a trend, in an uptrend, it doesn't break the higher lows. It only makes a higher low. So when they do a pullback, it's only going to make a higher low. It's not going to touch the orders that you placed in the previous higher low. All right, or it shouldn't touch. If it do, then that's a signal for you to understand trend may be changing. Trend may be coming to an end. It's becoming exhausted. All right, but if it's just going to continue trending, it's going to make a higher low. All right, and because you already started your entries, if you continue to hold these entries, you can keep adding on every new higher low that you that you see. All right, until it stops doing it. All right, but again, if you do add orders or just continue to hold this order down here, once price move from that higher low, Our expectation is either for it to go back to this high or for it to break this high, making a higher high. Right now, you stand to be in what we call massive profit, especially from this lower entry. We're looking at about roughly 1,300 plus pips or points, right? 1,300 plus points, right? And like I said, if you entered in right here on this first candlestick when it closed, and you stood to hold the test of time, up here you would have been holding for 48 hours. You see that number 48 in the front of my crosshair? You've been holding for upwards of 48, 47 to 48 hours. So you see how long this stuff takes in real time. It takes real time, right? But when you think about it, this is 2 days of trading, three to 2 days, 2 to 3 days of trading, right? Roughly a little bit over 2 days of trading. You did 40 hours of trading, right? The day job worker does this in a week. You did 40 hours in one day and you made roughly 1,300 points, right? What's the power of the point system? Power of the point system is this. Whatever dollar amount you trade against the points, if you stood to grab 1,300 points out of the market, it multiplies by whatever you traded on these lines, on these entries, right? So this multiply, if you just traded one standard, look at it. If you just trade one standard right here, right? One standard. So 1,300 points times one standard is basic math. $1,300 that you made in 2 days or 40 hours, right? That's average wage on a day job. $1,300. Now it gets very lucrative, of course, when you understand these structures and are confident enough to trade more lot sizes or higher lot sizes or more dollars. I look at these as dollar. That's the dollar amount. You trade $1 times 1,300 points, it's $1,300. Okay. That same 1,300 points at this higher high right here, you trade 50 cents times 1,300 points, $650. It's not bad for 2 days of trading. And you didn't have to get up and go to a day job, or you're not doing this on a day job, you know, that's pretty good in my opinion, right? 2 days, you break that up in 2 days, that's $325 a day, right? That's a nice salary. It sounds like a doctor's salary. $300 a day. All right. This same entry, holding it up to these points, roughly 1,300 points, right? If you put, as you get confident with these same moves, market structure moves, and on these higher lows, you put 15 standards on it, or $15 on this same move. $15 times 1,300, and that same move right here to this at this higher high point that was done last week, $19,000 in 2 days. And it's that real. And it's that real. Okay. This is that real. To get to these levels, of course, you have to become confident with the knowledge of understanding trend structure trading. That's what we're doing here. Once the market breaks out into a trend on the larger cycles or the larger trends, then what you want to do is look for your setup. Again, in an uptrend, you're looking for it to leave the low, go create a high outside the box, outside of the structured consolidation zone that it was ranging in. Once it does that, then you want it to make a higher low and don't go back to that low the low of that structure. You want it to make a higher low. Once you make that higher low, you can either enter in there or you can wait for the next one. All right. You can wait for the next one so that you can be sure that this is what it is. You know, once you make that next one, you have to make a decision to enter in or not. It's only two choices. Either you're going to get in or you ain't. You know, I'm not going to lie to you. It's easier said than done until you get used to it. And that's only because it's new to you, if it is new to you. But once you get used to this stuff, you get in and you understand what should come next. In an uptrend, you're waiting for a lower low, a higher low. Once you get your higher low, you're going to enter in on that higher low and hold for to a higher high. Hold to a higher high. Now I do have indicators that I use that give me some type of idea, and you can see them on my charts. When they give me some type of idea of what the higher high or where the higher high should be at, where price should move at. All right. And as you can see each day, it basically does it. It basically moves to those points. All right. So, and the same thing in a lower trend. I know we've been, um, this video has been been on it for a little while now. I don't want to make it too much longer because I think I've really put the information and the understanding of what it is that you're actually doing. Um, so I think I'm going to leave it here. Yeah, I think I'm going to leave it here. Just my whole point for this whole thing is keep it simple. Don't overcomplicate this process. Understand what this process is, what it is that you're doing, what you have to do, what your job task is when you approach these markets, and do that. Come to the market. We're looking for a trend. If we come to the market and we see the market has been ranging, ranging meaning that price has just been going in this sideways type of direction, but not really trending, trending up or down, then we waiting for it to break out of this sideways direction. It'll look something like this. Price it'll be going this sideways, then all of a sudden it'll break out. Well, if it break up, that's your low. If it turn around right here, that's your high. Right? If price stop at the top of this box or near the top of this box, that's your higher low. Either you could take this advanced entry, the first entry, but if you're not sure, you can wait for it to make a higher high. If it make a higher high, listen, you're in an uptrend. You don't need to let it do this too many times because you're going to miss the trend. Because it's only going to do this so many times before it reverses on you all the way. All right. And then if you skip this entry on this first higher low, you want to take the next entry on the second higher low. So you got an example of where higher lows go from the first one. So a higher low goes to a higher high. So if you get this, once you get this higher low here, and you see that it's a valid higher low, listen, you need to place an entry. Got to place an entry. You got to get in. Boom, it's time to get in before it moves to a higher high point. Got to get in. If you go ahead and get in, you're going to begin to make money as it goes to this higher high point. Boom. Once you get to that higher high point, you can make a decision to TP, which is take profit, or If you trust that it's going to continue, you can let it go and create another higher low. If it do in fact create that higher low and that trend is not over and it's going to go up, you can add another order in there if you want to, or you can start protecting your order down below with your stop loss. You can move your stop loss above your entry. So if price go down, it won't knock your entry back into the negative. It will just knock you out with a decided profit that you will decide when you're dragging that stop loss. It'll show the price, or it'll show what your profit or loss would be. But it'll be in profit if you put it in front of your entry. It'll show you what your profit would be if the market come down and touch it. All right. But if you decide to go one more round with expectations to a higher high, then you can either add an order or you can just, like I said, you can place a stop to protect this entry down here and then wait for price to navigate its way to a higher high, which put this order in extreme profits. Or if you put multiple orders here, it'll put all these orders in extreme profit. And you can make a decision to take profit altogether, or again, move your stop from here, move your stop loss above here so everything's protected. And if you want to see if it'll do it again, you can go for it. But overall, this is your objectives. Keep it this simple, and it will be. All right. It's your boy, JonFx Masterminds. I hope this made sense to you. Definitely restudy it if you need to, but understand this is your job. Keep it this simple, and it will be. JonFx Masterminds. I'm out.